How should one invest in this kind of a market? In the short term, are best of the gains behind us? Let's discuss market valuations and much more with Prateek Agarwal, Business Head and Chief Investment Officer with ASK Investment Managers. Prateek, morning. Thank you for joining us. Crude at a fresh 9-month high. Do you think that really will force this market to correct? Will crude be the catalyst which will act as a big positive for the bears?
Can you repeat that question? My earphone just came out. Sorry.
No, I was talking about crude. Crude, courtesy geopolitical concerns, is at a fresh 9-month high. Is that disturbing? Is that a big concern?
Yeah, so if crude goes up, clearly that is not so good for an importing country like India. However, year on year, the increase is still very low. So while you may be at a 9-month high, I mean, it has traded in this range for a length of time. So that is kind of fine. As an economy, we grow, 13-14% in nominal terms. So if crude goes up also by 1.5%, 2%, I think the growth of the economy can clearly take that into its stride.
Prateek, do you think the secular rally in cyclicals is now coming to an end and cyclicals in general are getting slightly exhausted?
Yeah, so that has been our long-held view. We discussed the same last time around. I can give you some more numbers. So you take two of the most expensive stocks in let's say a sector like FMCG, which I think most commentators will say is a very expensive sector, and you take two of the MNC names, very high quality in the capital goods space, have an optimistic projection for capital goods, by which I mean 15+% kind of sales growth, margins which are way higher than the current margins, somewhere higher than actually the average margins, and then look at what kind of profits are arrived and what kind of valuations they trade versus FMCG. So, if you compare the two, you would find, FMCG story to be much more compelling, while I am not for one moment saying that it is cheap. Actually, the so-called defensive part of the market today trades cheaper than the cyclical part of the market. Pharmaceuticals are valued very nicely. IT is cheap, while growth there may be an issue. While clearly sectors like capital goods, public sector banks, are trading at valuations which will probably make these sectors in the best case move sideways for a length of time.
Prateek, what's the view on INFOSYS then? With the new CEO now at the helm and being nominated, that story aside, what's really happening with the stock price? I mean, day before the news announcement, it ran up 5%, and yesterday it was such a volatile ride.
No, so, while I would not want to comment specifically on one company, but what I will say is markets typically, have to digest a change. We have to see how the new management shapes up. There are a lot of new faces which are around. We don't know track records of too many people who have come to the helm. They had very different positions earlier. So while they may be successful in those positions, whether they fit in and are able to generate energy in the new positions is the key thing that the market would watch. But that said, I really believe IT is a young industry. Look at the people at helm globally; they are all youngsters versus other industries. I think it's a good move to get in a young guy at helm. So, frankly, as a house, we are positive. In terms of valuations, well, it's a large, high-quality, high-corporate governance company, if not the highest, trading at mid-cap kind of valuations. So, we would really, be with the business and hope for better times. Really believe risk-reward is in favor.
So, do you have a market overweight position on IT?
No, Nikunj, we have several strategies in our high growth strategies. I mean, like I said, IT still doesn't figure because except for one company, nothing meets our growth expectations. But in our high quality offering, yes, IT is in line or slightly overweight versus the indices. But that said, we are not even index focused.
Prateek, valuations and expectations, they never go hand in hand. For the moment, valuations have gone up and the real economy has not recovered. But do you think valuations will remain stretched for Indian stocks and Indian equities because the India rhetoric has changed and post 16th May, everyone is confident that they should participate?
Oh yes, so while I may say that there is a part of the market which has gone up and probably is fully valued, but I would really not expect a largish kind of a correction even in that space. I think the new government has started with a bang. They have shown very high degree of if I may say so, activism. If I take a few things that have been attempted, is simply amazing. Last year the debate, for example, in defense was, you have a 26% FDI possible, should we take it to 49? And some people were talking with hushed tone 74. Here somebody comes and says 100%. So now the whole debate has changed to why 100, why not 74? So, the whole goalpost has been shifted. Very good. We like that. Second, look at what happened to environmental issues. They come, take the biggest name in business and say, it's not done. The next day, it's proposed that height of Narmada Dam would be increased by 17.
Okay, fair point, Prateek. So point well taken, but I want to be slightly more specific here, and let's be slightly more specific about banks. PSU banks, 3 months ago or 4 months ago, they were trading sub-book. Most of the PSU banks now trading above book. NPA concerns are still there. Credit growth has not picked up. Most of the banks don't have a good quality balance sheet. They lack tier 1 capital. So if concerns are there, why are market men so excited about buying PSU banks?
No, so we are not excited about PSU banks. We don't hold any. We don't intend to hold any. The problem of NPAs are there. The problem of NPA is getting recognition is getting postponed by sale to ARCs. A lot of that money, to our mind, may not come back. I can, if you give me time, dwell on why we stay negative. While economy is improving, it may improve the small businesses. However, the problems in PSU banks are almost without exception related to large businesses. So a government change will not get in gas at a cheaper price for power plants which do not have gas. So how does those NPA become performing assets? Second, will regulators allow higher ROEs for power projects which are based on imported coal? I really don't believe that is going to happen. So if they don't generate free cash flow, how will banks improve their cash flow? So all of those challenges remain. And the Basel III sword is there. So unless one believes that Basel III would not happen or would happen selectively to only very large Indian banks, I really don't believe that PSU banks offer any story at all. The amount of money that they have to raise is humongous. In some cases, it is more than 100% of current market cap.
Right.
That they have to raise over the next four odd years.
Right.
Prateek, do you want to jump in on this trend? The DVR discount is contracting not only for Tata Motors, but for other DVRs also.
No, so I think you said it. In bear markets, you will find the discounts to increase. In bull markets, they will narrow. So it's been a fair trade, but it's always a challenge to understand as to what kind of discounts it will trade at. And different markets have had different experiences. In the US, a DVR kind of an instrument trades probably at an 8-10% kind of a discount. and that gives a lot of hope to an instrument like a DVR in India. If you actually look at the economic value, then a DVR actually offers higher economic value because the dividends that a DVR holder gets is higher than a normal shareholder gets in lieu of the voting right. But voting right to a non-strategic investor cannot be priced on an Excel sheet, and a higher dividend gets priced. So actually economic value of a DVR should theoretically be higher. So those are the things, but in Indian context, it's happening after a long time. What were you saying?
No, that's a fair point. I just want to take forward that point. I mean, someone who's planning to buy 5,000 shares, 10,000 shares, 50,000 shares, they are not really bothered about strategic investment in their company. So DVR always is a better route.
Yeah.
So Prateek, I'm going to move on from the DVR topic and talk about PSUs. PSUs is where all the action is. In general, markets are of the view that the NDA government will galvanize the entire PSU space. You don't like PSU banks, but do you own anything from other PSU groups?
No, we don't like the PSU space as such very much, but we do like, mineral producers like Coal India, while we may not own them. So I think what had gone wrong with the PSUs is not so much business. Business continues the way it was earlier. There is no perceptible change in business as of now. And any perceptible change will take some time before it occurs. Earlier, my sense was that government was seen as a desperate seller, and it did sell various PSUs at very, very cheap valuations. I think the big change has been that from that position, the new position is that we may not sell PSUs at all. So, we have seen that shift in position create value in lot of non-PSU private sector stocks as well. So, my sense is the same thing is happening. That is one. Second, very good quality PSUs, some of the best names actually happened in a Goldman Sachs ETF vehicle. Now, if you are buying an India basket, this is a great basket to also buy. So a lot of new money that would have come in would probably have also come into this kind of an ETF. It would be interesting to see how the size of this ETF has increased since inception, and my sense is it should have grown quite considerably. So that is what is happening. However, the reason for not liking PSU businesses are that they tend to be 12 to 14% ROE businesses, and hence to our mind cannot generate long-term sustainable compounding values.
Prateek, Indian economy has hit a bottom. IIP has bottomed out, inflation has topped out, earnings are likely to progress going forward. So what is the best way to participate, assuming that we have a strong economic revival on cards? Because the stocks you own, they are not a clear proxy to economy.
No, the whole of the stock market is a proxy to the economy. Going forward, the big changes are going to be, yes, faster growth rate as for the economy as a whole because of cyclical factors, because of probably more decisive decision making, because of probably less focus on subsidies and more on nation building. But at the same time, the big reforms that may happen are also related to GST, and that benefits the other part of the economy as well. And in the end, everything takes time. The financial markets value a financial stream of cash flows, and on that, you have to keep looking at what looks good at a point in time. So we are really confident of where we are positioned. I really can't think of how to tell you. It's a very, very bottoms-up kind of a portfolio. So if I talk about our high growth portfolio, so while it is extremely high quality, it is slightly more expensive than the market in terms of a valuation like PE. But in terms of growth expectations, the portfolio has delivered in the last quarter something like 31% growth in profits, while the markets did 9% kind of growth overall. Going forward, again, we believe the portfolio will deliver 5 to 10% higher EPS growth versus the market. So that is how we are positioned. We are quality and growth focused, and we really believe that's the only way to retain monies and grow monies. The other part which you are saying is economy related and may tend to grow profits very well, may not grow EPS as well, because we have seen what companies, businesses like a Larsen, like an ASHOK LEYLAND has just about done, or an Idea has just done.